So based on Euro AUD, the analysis is still the same, like the bias is still the same, which is bearish. So we saw this area reacting to this area of structure. These candles with wicks have reacted to this area of structure, and we saw a little bit of bearish engulfing candle, which has engulfed multiple couple of candles from on the left side. So going into daily time frame, what we can see is the price is still bearish, though overall here it might be a little bit confusing, but still the bias is still bearish. So what we saw is that the price managed to push more to the downside. We saw like of 3 to 4 or 5 days the price was pushing to the downside, and now we saw this little bit of bullish candle. So this bullish candle might be maybe a reaction to this zone of demand, and we might be able to see a little bit of push to the upside before the price continue more to the downside, but we might see it in a clear way on the lower time frame. So jumping into 4-hour time frame, what we can see is that still if you haven't seen this analysis, you can check the previous video, which I will link it in the description. So the price has managed to form this, what we call, is an ascending channel. So this is a little bit of a typing error. So this one is ascending channel. So this one is ascending channel. So the price has managed to move in ascending channel, and now this is the area structure that the price might be able to react, because there is this demand zone. So the price managed to break down this area of structure, and there was a little bit of a quick retest which the price managed to react to, and then the price fell to the downside before the price decided to come and retrace. So what we can see now at the moment is that from this ascending channel, the price managed to move in a channel like we saw this one, first touch, second touch, and here was the third touch, which we expected that the price might have reacted, coming to the upside and react on this level of structure before coming to the downside, but that didn't happen. So our bias also changed. So the price managed to break down, and we were continuing with a bearish momentum, because if we would have broken from this level and continued to the upside, it means that would have been candle retracement. But if that didn't happen, and it didn't happen, so our bias was still focusing on turning into bearish, because there was no retracement to expect. So the price managed to break, and this was a quick retracement. So what we expect from this week starting tomorrow is that the price might be able to push a little bit of 50% of the move and continue more to the downside. So still it's bearish. So using a fib retracement, using fib retracement from this one, swing lower high to lower low, 50% will be around here, and 61% will be around here. So getting rid of this fib, so these are the level that the price might be able to come and react. So what we expect is the price might continue and correct up to this level of structure, either on 61 or 50, before it continues to the downside. But if we'll be able to see the price doing that and unable to create a new high or lower highs, and we see a little bit of push to the upside, we will just obey and see what the market does, and if we get change in structure, we'll be able to continue with it. But from this area where the price is at the moment, what we expect is a little bit of retracement before we go to the downside, and from there to this area of structure, and we might be trailing our trades before hitting our overall target, which is around these areas of the lower lows. So this is the overall insight on this particular pair. So the bias is still the same, just like previous week, and now we expect a little bit of a retracement before the price keeps on pushing to the downside.